So with home prices going up and this area being able to sustain that, which is great, right? One of the challenges or things to think about when you're buying with financing is the home appraisal. So what are your thoughts on that? How does a buyer or even a seller, right, that is in that transaction and an appraisal's involved, and they may be concerned about, well, I got X over asking, or I had to pay X over asking. How should they look at that appraisal? Is there a chance that maybe it's going to affect the transaction from closing?
We do frequently see with how competitive it is in this market that people are bidding over asking to get the house. And the first thing to know is that contracts look forwards and appraisals look backwards. The methodology of an appraisal is that they have to use comps that have already sold, homes that have already sold in the area. So when buying a home, your value is fluid. There's no exact calculation to what a home is worth. And once you've bought that home at that price, that now sets the precedent for that neighborhood. When you buy a house that does not appraise, it does not mean that you have to make up the difference in cash. What it means is that your loan to value has changed. So if you are looking to purchase a house with 20% down, that is an 80% loan to value. If your home under appraises, the bank uses the lower between the sale price and the appraisal amount, which means that 80% loan to value may now be 85 or even 90%. We can use mortgage insurance products to bridge the gap for that loan to value, so you do not have to spend any additional money to acquire the property. And with as stable as this market is, we frequently see clients have positive equity within just a few years after buying their home.
So then from a seller's perspective, in that situation, right, if the loan to value can be shifted a bit, the buyer's still paying that price over asking, the seller's not going to have to be worried, even though it didn't appraise at the needed appraised value, they're still going to get the amount of money they agreed to sell it for, right?
Of course, and this is something that we strategize and review with our clients before making the offer, and that we also clearly communicate to the listing agent when the offer is submitted.
Let's say, devil's advocate, that the offer is at the top of the loan to value, right, the mortgage. So there isn't maybe that wiggle room, but the seller still wants, even though it didn't appraise, the seller still wants to get that amount that they agreed to, maybe because there's other offers on the table. Is there anything else a buyer can do to still close at that agreed upon price? There
is something that can be done. When we do have buyers who are making the minimum down payments, whether it's 3 or 3.5 or 5% down, there's only a little bit of wiggle room with regards to adjusting loan to value. In that situation, the buyer will have to bridge the gap between the sale price and the appraised value, but it's absolutely acceptable to do that with any loan program.
And bridging the gap means that they're going to bring some additional cash to closing so that above the mortgage, they're going to be able to still give that seller what they expected.
Correct.